So what worries you then, Bob? What could be the fly in the ointment here? I mean, obviously, any kind of negative trade headline is always a possibility. Brexit as well, things are very fluid there. But what is a persistent worry that could rear its ugly head, if not at the end of this year, then early next year?
Yeah, is the economy strong enough to promote a 10% earnings growth for the S&P 500 next year? That's my biggest concern. Unless we get improvement in profit margins, which seems fairly unlikely at this stage of the cycle, particularly with labor costs moving up, really hard to see 10% earnings growth. We're going to need a very strong economy. I think 2% GDP is not going to do it. So my biggest concern is we get into fourth quarter and companies start saying, yeah, we're doing okay this year, but next year the numbers have to come down some.
And how much does the rest of the world need to start firing on slightly better cylinders? Because a lot of the key movers, a lot of the key companies that lead us higher are, of course, internationally exposed as well, Bob.
That's where I was going to head second. Can you give me some better manufacturing numbers out of Germany, China, other parts of the world? You can get some we don't even need good numbers, just stabilization, the absence of further deterioration. And I think that will provide some buoyancy to the market, to those global or those multinational companies that have lagged so far this year.